These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, that end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will enter a transaction related to a sales receipt for a particular job into our bookkeeping problem in Excel, keeping in mind how this same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to take a look at QuickBooks quickly and then jump over to Excel and enter this data. For thinking about QuickBooks, what we are going to do here is create a sales receipt. This is something we've seen before. However, we're going to apply the sales receipt not to a particular job, but not to a particular customer, but more specifically to a job that is then tied to a customer. So this sales receipt means that we're kind of bypassing the create invoice, which means we're going to put it into accounts receivable and record the sale, and then the receipt payment that would happen later. In this case, something that's happening at the same point in time. So we have a service item. In this case, we're going to do service on a guitar, and we're basically going to get paid at the same point in time that the service is done, recording the sales receipt, which will then debit or increase the amount of revenue, and it will increase the amount of receipts that we get in terms of cash or undeposited funds in this case. So if we look at that, then it's going to look like a sales receipt, just as we've seen before. Note it's to a customer, but it's going to be applied to the specific number. This is a job number. And the relevance of that is that when we look at the report, we can then tie this out to a specific job. And that's useful if we're applying time out to a job or doing a cost system, in that, for example, if we're a law firm or a bookkeeping firm and we have different staff working on a job, we might want to apply that to a particular job and be able to go to this particular customer and say, this is the job that we have completed, these are the hours that have been included in that job, and this is the end result and the bill. So it can really be helpful for us to track specific jobs, specific billing. It's also very useful in construction. We won't get into the construction area of it, but the jobs function can be used in multiple different ways to track different type of billing items, types that we're going to bill to a customer in a particular type of job. So we've got the date here, we've got the sales number, we've got the item, in this case not inventory item, we're not selling a guitar, we have a service item, we're going to say it's guitar service, and that's going to be the rate of $100 for this service. So therefore, there's no sales tax on it, one, because it's a service item, and the journal entry, two, then would be that we are going to increase the cash kind of, but it's going to go into that undeposited funds because we haven't put it in the checking account yet. And it's going to increase revenue, not merchandise sales, but some other type of sales. Could be called fees earned, some kind of service income or revenue. Let's take a look at what it would look like in Excel. Back in Excel, we will be entering this data. Note that we have hidden some cells to the right. So we're starting on column U, so that's not column A, because there's a lot of hidden data so that we can have everything side by side and be working with as little bit of data as possible, is just what we need, so we can maneuver around this worksheet as best we can. So now we're going to say that we have this sales receipt for a particular customer. First question, we're going to say, is cash affected? And of course, we're going to say that it is affected, but not the checking account, undeposited funds, meaning we haven't yet put this money into the bank, and therefore we will increase undeposited funds until we do. So this is a debit balance account. We're going to increase it by doing the same thing to it, which in this case is another debit. So we'll copy the undeposited funds. We're going to put that on top in V5. Right click and paste 1, 2, 3. The date of January 31st. The amount then, undeposited funds, will be $300. Note that this might differ a bit from the PowerPoint, which I believe was $200. So we'll have a bit of a deviation here. We're going to have $300. which will make up a difference in the prior transaction for this particular client, Sam the Guitar Man. So then we're going to credit the 300 as well, and that's going to go to then a revenue account. The revenue accounts are down here: merchandise sales, rent, and service. We're not selling a guitar, we're having some type of service income. Remember that other problems might call that fees earned, or just revenue or income, or service revenue or service income. We're just going to call it service. We're going to copy that. It's a credit balance. It's going to be going up by doing the same thing to it. In this case, as another credit. Putting our cursor in V6, right click and paste 1, 2, 3. So there's going to be our journal entry. We have journalized the journal entry. We will now go through the process of posting the journal entry from the general journal to the general ledger. We're going to go to the undeposited funds. In order to do that, make sure you got the freeze panes on here, which is going to be in AJ. Go to the View tab, go to the View tab, and go to the Windows group, freeze panes, and mine's already frozen, so we're okay. But freeze the panes if they're not frozen. Then we'll go to the right, looking for the undeposited funds, scrolling to the right. I think it's going to be down a bit, so it's way down here. We are in the next cell in AU32. So way down in AU32, we're going to have to scroll up a bit to see the account we need. So we'll select equals, and we're scrolling over. We want to be on this side. We want that 300 in W5. And enter. So there we have it. Now we are at that 300. If we scroll back to the left, we should see that 300 on the trial balance. So if we scroll up, there's the 300. Now we want to record the service. It's going to be in order: assets, liabilities, equity, income, and expense. Here's the service way down here. We're looking for those dark blue accounts then. It's in order. 2 on the general ledger. We have the assets. We have the liabilities in orange, equity light blue, and there's the service in dark blue. So we'll scroll back over here. We want to be in cell BL9. We are in cell BL9. We're going to select that equals, point to that 300. That's going to be the 209 plus the 300 brings the balance to 508. Scrolling back to the left, we should see that 508 on the trial balance. Scrolling down, there's the 508. Scrolling down to the bottom, we see that we are back in balance. Net income is affected, so the credit increased the revenue accounts, which means that our loss went down, which means that the debits are higher than the credits. The expenses being more than the revenue, but it's more by less, so that we have less of a loss here of $6,222. We'll see that on the income statement as well. So we're going to go over to the financials. Before we do, however, note that although we recorded this to a job, there's no recording to the job in this transaction because we didn't have to put anything into the accounts receivable account. If we had, then we would track the receivable by job. So if this transaction was not going to payment, undeposited funds, but to the receivable, then we would track it by job. We'll see that in a future presentation as we work with the jobs here. Since we got paid at the same point in time the work was done, then we don't have to go through the receivable subsidiary ledger here, it not needing to be backed up. So we're going to go ahead and see what happened to the financials. So we did something to cash. I'm just going to click this and see what happens to cash over there. And then we're going to go down to the service. I'm going to click this and we'll go to the financials, which will be created automatically, and see what happened. We're then going to go to the View tab. Before we do that, Windows group and unfreeze the panes. And then we'll scroll to the right. Going to go all the way to the right to where the financials are calculated. Here we are. Cash has been updated. And actually, we didn't do something to the cash account. We did something to the undeposited cash account. And this is also updated. Should probably be part of cash, but we're going to break it out separately here to show it separate on the financials. Our total assets have been adjusted, and they equal liabilities plus equity. We see on the income statement that the service revenue went up, but it's still less than our total revenue, still less than our total expenses, meaning we have a loss here. Here is our loss. This negative number represents a loss here. Note that when we saw the negative number on the trial balance, that represents, we saw a positive number on the trial balance representing the fact that the debits of the expenses, when we think of this in debits and credits, were greater than the credits. So these signs are something you're going to have to kind of deal with. That when we talk about something in terms of debits and credits, and something that we talk about in plus and minus when we talk about the financials and the trial balance in terms of debits and credits versus the financial statements in plus and minus. We just have to work on that and keep getting that straight in our head. What is the difference between a plus and minus function and a debit and a credit? And then this item, the net loss, will also be on the statement of equity, part of the calculation for the ending equity balance, that ending equity balance then being part of the balance sheet. Hello, in this presentation we will be creating a sales receipt applied to a particular job for a particular customer within QuickBooks Pro 2018. If you have been working along with us, that's great. We're going to be continuing with the Get Great Guitars problem. If you have not, that's okay. We will be creating a sales receipt. That sales receipt then being applied to a particular job that we have created for a particular customer and see what the impact is of entering that data. If you have the backup file to this point, you can restore that going to File, Open, and Restore. If not, that's okay, but if you're working through the problem, it'd be helpful to be all at the same point in time. We will be working with customers and jobs that we have set up in the past, so if you're following along and you want to have those exact customers and jobs and the data that we need, then there you can put that information in. If not, then you can go back and build the information and or just see what we have in terms of creating a sales receipt for a job. Also note that we have the Home tab open, which is going to be under Company and Home Page. And we have the Open Windows here, which is under View and Open Window List. That'll give you this list of open windows. What we will be doing here is creating a sales receipt as we have in the past, but rather than just applying it to a particular customer, we are going to apply this to a particular job. And in order to see that, let's take a look at the jobs we have set up. If you haven't set up jobs or you want to set up the jobs that we've looked at, take a look at a prior video in terms of how the jobs are set up. We'll take a look at the jobs that have been set up here by going to the Customer Center through this link, or you can select the drop down, which I recommend getting used to because you can get to the center anytime from the drop down, Customer Center. Here is our Customer Center. We set up two jobs, job 3005 and 4002, those being related to the customer of Jones Guitar and Sam the Guitar Man, respectively. We set those up just by clicking on the customer and then going to New Customer Job and adding a job, and then just basically typing the number there. The usefulness of this is that we may have multiple jobs for a particular customer and want to track those jobs separately in terms of applying time and more of a job cost system per job rather than simply by customer. And so this job then will track particular job. For example, we may have sold a guitar to Jones Guitar, and then we may have some other jobs that we're doing maintenance on the guitar in some way, and therefore want to track that in a separate job and track that time. We could have multiple jobs for a particular client and want to make sure that we are billing those multiple jobs on their own and tracking them separately. That's when a job cost system and the jobs within it, the creation of jobs, can be useful. What we will do right now is create a sales receipt, and we're going to create a sales receipt for these individuals, these companies, Jones Guitar and Sam the Guitar Man. However, we are going to create it for the particular job related to them and track that information by job. So we're going to go back to the Home tab within the Open Windows, and we're going to create a sales receipt first for Sam the Guitar Man. So we're going to click on Create Sales Receipt. Note that this is similar to an invoice, but rather than debiting accounts receivable or increasing the receivable, what is owed to us, we're going to say that we received payment at this point in time and put the increase into undeposited funds. We're going to make it to Sam the Guitar Man. However, we're going to type in not the name, but the number of the job 4002. We can see that it will populate up here the full name as we just typed in the number, name and then number. And it'll also populate down here giving us the name and then subcategory of the number. If we tab through this, we're going to have the template, and we're going to say the payment, or we can say cash. If we tab through, we're going to say the date is 1/31. We're going to keep the sales number the same. That should be generated from the sales receipt number. That should be generated from QuickBooks. And we're going to tab through this to the item. And we're going to say it's going to be a service item. We could select the drop down to select the service item, or we can select the service item by starting to type it. This is an inventory item, this is a sales item, not inventory, not something we're physically selling, but service on the guitar in this case. Saying that QuickBooks is applying sales tax, I'm going to say OK. And then this is actually an item, because it's service, typically probably does not have sales tax in most states. And therefore, I'm going to take that off by selecting down here, customer code. If you select this, it's out of the screen right now, but the drop down is going to say tax or non-taxable. And we want to make sure that it is non-taxable. And that currently is not adding the tax here. So it's currently non-taxable because it is a service item. It's populating for itself here, so we already have this item set up for the service item being 100. So we're going to keep that in place. We're just going to say quantity 1, and there is that information for Sam the Guitar Man. When we record this, then it's going to increase the undeposited funds, and it's going to credit the service revenue. So let's go ahead and record this and see if that is indeed the case. So we're going to open up our two main reports here, our balance sheet and profit and loss or income statement, by going to reports. We're going to go to company and financial. We're going to scroll down to the balance sheet. And we're going to change the date range by first going to customize report. The date range being 01/01/21, January 1st, 2021 to 12/31/21, December 31st, 21. And there we have that. So the sales receipt then has increased this undeposited funds. So it didn't put it into the checking account. We increased undeposited funds. If we zoom in on that, we see that 100 here. Zooming in on that, we see the 100 there. We're then going to close back out of this. I'm going to close this back out. We're going to close this back out. The other side then, if we go to reports, we go to company and financial, will be the profit and loss we want to look at. Changing the date ranges from 01/01/21 to 12/31/21. We see our information here. Now we had service revenue, so if we double click on the service, we see the item here. There's the 100. Double clicking on that, we see our sales receipt there. So there is the journal entry that has been created. We're going to close this back out. We're going to do this process one more time, and we are going to go back then to the home page. So let's go to the home page. We will create another sales receipt, and we're going to create it for 3005. And that, once again, it's going to be a job, this time related to Jones Guitars. So Jones Guitars 3005, the subcategory. It'll type it in this format, Jones Guitar, and then the job 3005 up top. Tabbing through that, we're going to say we got cash. The date will remain the same. The sales number or the sales receipt number will be generated. And we're going to tab through to the items. We are once again going to choose the item of a service item, the partial service. We're going to tab through that. And this time we're going to say that we have the quantity 2 of those. And note, this is an area where if we're tracking by service item, if we're doing a job cost system and basically just applying our time out, we'd want to be tracking our time and then applying it out to the particular jobs. And we might have different people within our organization that we have different billable rates to, different items then to, and then be counting the time they spent on those particular processes. That in essence is what we are recording here in terms of a job cost system and applying those costs to a particular job for a particular customer. So we have that information here. We're now at a cost of $210. The sales tax, we should not have any, this again being a service item. So we're going to turn off the sales tax. I'm going to take the tax here. We have none. I'm going to say none and say OK. And that has been turned off. So now we're not charging sales tax for the service item or value tax. And that will be that. So we're going to go ahead and record this. We'll check one more time what happens on the financial statements. It should be increasing undeposited funds. It should be increasing the sales. So we're going to say save and close, and yes. And then we're going to go to the balance sheet, and it should refresh automatically. We see undeposited funds here, 300. We double click on that. There is our 100 from the last one, 200 from this sales receipt. Double clicking on that, we see the sales receipt. Closing this back out, closing this back out, we can go to the profit and loss in the open windows. And within the profit and loss, we're going to take a look at the service items. Double clicking on that, we see that 200 there. There's the service item, and there's that information here. All right, I'm going to close this back out and close this back out. Note that if you were tracking jobs and the job cost system, you can also have various reports in terms of the job cost system. So if you select the reports up top and you scroll down to the jobs and time mileage tracking, you could have the job profitability summary, the job profitability detail, and look at information if you're applying more costs out to the jobs. This could be very useful if we're not doing just a service company, meaning applying hours out to the job, but using the job cost system to track costs per job and making bids on jobs in a job cost system. In that format, these reports can be used to look and track by particular job, not just the revenue per job, but also expenses applied to each individual job as well.